Willie, Global Financial Crisis Hotspots and the Many Pressure Points. Jim says the crisis in Turkey is the critical first step towards the global reset where gold and silver will be revalued at much higher prices. Here's more. By Jim Willie of Golden Jackass, Jim Willie CB, editor of the Hat Trick Letter. Use the above link to subscribe to the paid research reports, which include coverage of critically important factors at work during the ongoing panicky attempt to sustain an unsustainable system burdened by numerous imbalances aggravated by global village forces. The historically unprecedented ongoing collapse has been created by compromised central bankers and inept economic advisors, whose interference has irreversibly altered and damaged the world financial system, urgently pushed after the removed anchor of money to gold. Analysis features gold, crude oil, US dollar, treasury bonds, and intermarket dynamics with the U.S. economy and U.S. Federal Reserve monetary policy. A preface is required to explain that the U.S. Federal Reserve is responsible for every grand financial crisis in the last 30 years, dating back to the Great Depression and its supposed spurious resolution to Black Monday of 1987. Little realized is that the '87 crash was a direct result of the impact from outsourcing U.S. industry, whose trend began in 1984 with Intel. The lost legitimate income had a grand effect on the inflows to the U.S. stock market. Of course, the newly forming Reich economic team preferred to describe it differently. The important outcome from the cleanup was the creation of multi-dollar trillion bank derivatives to serve as phony foundation for the entire Western banking system. Greenspan blessed it as good and firm, but now we know it was soft and weak. These derivatives are blowing up, which will require bailouts and a replacement in the gold standard. Instead, expect the derivatives to ramp up further with greater leverage up to the assured catastrophe. The fallout will be great. Two critical factors have contributed to the ruin of the king dollar realm: the global financial structure in place since 1974, but greatly altered since 2012. The first is the entire concept of outsourcing U.S. industry. This is a tremendous textbook example of microeconomics making individual success stories with greater profitability, like to Intel Corp., which began the outsourcing trend. These realized lower costs. But the failure is at the macroeconomic level, since the U.S. economy lost a large chunk of its legitimate income. The Reich economists, aka Keynesian mutants, promoted the entire movement, and steered the nation toward the clean society with financial engineering. Its results can be seen with financial crisis in sequence without end, at first with the subprime mortgage bond situation and later with U.S. government debt dependent upon direct monetization. The entire U.S. financial structure has become a computer machinery-driven obscenity with pervasive derivative usage in hidden form. It is probably in the dollar trillions each month, ever since the vast petrodollar derivatives began to be dismantled. Now the U.S. economy is debt-ridden beyond simple patchwork solutions, which will require bank bailouts and a replacement in the gold standard. Instead, expect the households to see bail-ins in a grand betrayal and exercise of tyranny. The critical second factor is the QE monetary policy. It is pure unsterilized hyper-monetary inflation, the worst possible kind. The Reich economists call it stimulus, when it is really just an asset inflation engine for the stock and bond markets. The result is what many analysts have begun to call the everything bond bubble. All sovereign bonds, led by the US T-bond and extending to the Eurobond, have become qualified as subprime bonds. They have very few buyers outside the central bank's accretive trading desks. They have growing debt levels. The U.S. government debt has a trajectory for over a $2 trillion deficit in this fiscal year. They deserve 8% to 10% yields, but the computer machinery keeps it under supposed control. A magnificent historical U.S. Treasury bond default via debt restructure is assured, unless President Trump can confiscate several dollar trillion lying around in elite criminal coffers, under threat of execution for mass murder, grand larceny, sex slavery, and treason. Now the US T-bond is being discarded on a global scale like yesterday's newspaper and dumped in Eastern large-scale projects, which will require bank bailouts and a replacement in the gold standard. Preface on Reich recession. The consumer price inflation index is running at 10% annually. The fierce recession since 2006 never ended. The lie on GDP economic growth is between 4% and 7% every year. The stat rats in the US government busily suppress the CPI recorded officially by this amount, in the price inflation calculation. It is done so in a grotesque exaggeration in persistent fascist propaganda. This is the worst inflationary recession in the US history. It requires much more money creation to prevent a total collapse. The solution is astonishing hypermonetary inflation to wash away debt, or else grand systemic failure. The principal beneficiaries are Wall Street bankers and those wishing to finance the US government gargantuan debt. Therefore, the central banks with the governments under their control will be forced to monetize truly staggering amounts of debt in order to prevent both economic decline and banking system collapse. Then comes monetizing the gigantic sovereign debts, where the official bonds have all become subprime. Gold will benefit from the official monetization process and the implementation of the gold standard, led by the East. The shadow government stats folks do excellent work. Theirs was confirmed by the Chapwood CPI calculations in recent years. Using pre-1990 methodology, the Consumer Price Index, CPI, is currently running at over 6% nowadays. However, using the same methodology employed prior to 1980, CPI is currently running at over 10% nowadays, shown in the graph below. The Clinton-Rubin gangsters conspired to falsify all economic statistics, with aggressive motive to cut Social Security payouts and federal cost of living raises. Even following the Lehman crisis event, the CPI remains over 5% in reality. The 10% price inflation is the US economy reality, woven into the entire system, a consequence of monetary inflation from QE and astounding US government deficits. Therefore, the lie is at least 4% to 5% every year, every single year on economic growth declarations by the US government and their Wall Street managers. With official GDP growth stated at 2% or so, it means minus 5% recession due to the lie. They call inflation as growth. This is simple calculation to reveal the grand lie which persists every year. To be sure, price inflation, running at a 6-year high, continues to eat away at any wage increases offered. The lie is shown in the red series, with claimed CPI at 2.5%, which is absurd and far less than reality. There is no question. The true consumer price inflation rate is above 6.5% to 7.0% when entering the world of reality. Even in the Fugazi financial world, the analysts are waking up to the disconnect between the suppressed U.S. Treasury market bond yields and rising price inflation led by food and materials. They also are noticing the accelerating trend of U.S. T-bond dumping by foreign bond holders, in a grand U.S. dollar rejection. Yet the bond yields do not budge. Hence the growing recognition of yield capping from the U.S. Fed QE program and also, significant yield capping by the U.S. Department Treasury from their powerful Exchange Stabilization Fund. It is a multi-dollar trillion slush fund, which ironically was funded by the Saudis at its origin. The kingdom's accounting shows several $100 billion missing each decade from their forex reserves, made easy by a tick report with OPEC nations grouped together, until recent years. The solution will be a magnificent hyperinflation sweeping action, or else grand systemic failure. During the quantitative tightening, plans might come to install a new system with enormous USD devaluation, alongside other major currency devaluation, with respect to gold and silver. In other words, O/AG will rise by an order of magnitude with respect to the USD. Think of it as tiny steps backwards, followed by 2 giant leaps forward in inflating debt away, with gold the winner. The BIS and Western Central Bank franchises will assure the process, since their balance sheets are all wrecked. Their asset book will be lifted upward by gold bullion ledger, done surreptitiously. The U.S. government and the U.S. Fed will be forced to provide more true stimulus to the Main Street businesses and households. So far the only recipient has been the bankers in profound banker welfare. The result will be good impetus for gold and silver in an unmistakable inflation event, which lifts consumer prices in a noticeable manner. Broken debt engine debt is at tragic levels of broken efficiency in its production of economic activity. It takes over $5 to produce the supposed new $1 in economic activity. The normal levels had been $1.50 in debt to produce $1 in economic activity in the 1990 and early 2000 decade. The only problem is that in reality it is producing a recession of lesser magnitude. The debt engine is totally broken. It does not work. The debt saturation levels have been reached. The growth is a grand lie, the grandest lie of the Reich economists. The Ponzi scheme is the entire US economy. This is very difficult to grasp and harder to accept. The entire system is running on debt fumes, but in a horrible contraction. Nothing has been fixed since 2008. All systems have been fed more and more debt, using free money. The valid true solution involves both business creation and sound money. The US UK fascist Tog team have no interest in either, only in self-enrichment and more power with war as a constant defensive tactic. The game is over, with only the denouement to be played out. Unlike the usual past crises, this crisis has a debt saturation factor which is utterly astounding. Therefore the efforts to come on stimulating the US economy will in all likelihood result in a national crisis which the jackass has been calling the systemic Lehman event. All official sovereign bonds are subprime. The key economic zones are moribund. The financial markets are rigged. The derivative machinery is on full tilt, with great hidden strain. The United States leadership crew will next be working to install the gold standard, in order to coincide with the Eastern superpower efforts in the same direction. To be left behind means a certain third world entry for the United States. The global financial reset has begun. Let it be known that the resolution of the financial crisis in Turkey can be regarded as the first critical step in the global financial reset, which has already begun. This is according to consensus among the jackass colleagues. The introduction to critical steps has been the ongoing Deutsche Bank rescue and Italian banking system life support, in the West. The introduction to critical steps has been the creation of the gold oil yuan futures contracts in the East. The global reset began a few months ago, with no marquee signs, no flashing lights, no bans, no hoopla. The banker cabal prefers that the public is ill-prepared, since the elites among them are busily preparing their positions for tremendous profits in the dollar trillions, equal to the losses expected by the clueless public. Risks, dangers, hotspots and pressure zones, they are just too numerous to identify completely in a short list. The entire global financial system is in ruins, with tremendous distortions, massive misallocations of capital, grand abominations in rigged financial markets, victim zones from the weakest foreign regions, ugly fascist pressures from the US and UK, sanctions left and right toward friend and foe, war to obstruct the defiance away from the US dollar trade realm, and narcotics bribery to remain loyal to the toxic tainted king dollar. Consider the following long list of extreme risks. Each risk contributes to the entire gold equation as being the central element of a bona fide solution. All the following crises and initiatives are working to remove the US dollar as global currency reserve. 10 years ago, the crisis zone was primarily inside the United States, with the mortgage bond subprime crisis breaking out. Little known for that crisis was the fuse lit by China in 2005, when they began selling dollar billions in Fannie Mae bonds. They were angry, very angry, at the U.S. government for reneging on a gold lease of large scale which was part of the Hong Kong Resolution in 1999. History is so poorly written in the West. To mention the Chinese dumping of Fannie Mae bonds, they would have to mention the reneged gold lease. So neither is cited in the financial press rags, which serve best to line bird cages. Notice the numerous sites around the world, unlike in 2007 leading to the Lehman failure, kill. Currency crisis has slammed Turkey, along with Iran, Argentina, and Venezuela. The U.S. government and Wall Street bankers believe they are inflicting pain on the wayward nations who refuse the Washington lead, but they are assuring an Eastern rebellion against the U.S. dollar. They will align with the Eurasian trade zone, and move toward gold gradually. Emerging market debt collapse has crippled numerous nations. Their total USD-based debt is between $9 and $15 trillion. The lure of low interest rates since 2009 resulted in disaster for nations which did not factor in the effect of currency decline in their home countries. A wrecking zone resulted. The victims will be the Western banks who on the hook. These emerging market nations will seek help from the East, where the gold standard is emerging. Belt and Road Initiative projects are a non-US dollar engine. They are directing numerous nations into $6 trillion of new massive projects. Watch China offer up a vault full of U.S. Treasury bonds in indirect exchange for funding purposes on many projects. They will gain strategic positions in every case. Germany and Russia are working constructively together, using German brands and newly created subsidiaries to produce and to sell inside Russia. None of this trade will be in the USD form for payment. The ultimate irony might be that their bilateral trade might soon be done in new Nordic euro terms, gold-backed. The jackass expects Frankfurt to become a big RMB trading hub, which will serve the Eurasian trade zone. The Deutsche Bank and Italian banking system disaster continues to fester. If truth be told, D-Bank is a Bush narco money laundering bank, and the site of hidden Saudi gold. It also operates as the biggest European bank derivative location, those dollar trillions in slush funds which support the various broken entities. When Italy goes bust, the principal victim will be the French banks, which own 4 times as much Italian debt as the German banks. Turkey and Italy will bring the financial system to its knees. The European Commission has turned rebellious to both Washington and the US dollar. Just a few months ago, the EU court declared that Nord Stream 2 companies were justified in continuing their energy pipeline project. It was like an absolution from US government sanctions. Then, following a true disaster in the G7 meeting, a few key nations lined up several large trade deals with Russia, in full defiance of Washington. Then most recently, EU President Juncker complained that all the trade payment for European commerce made no sense to be so tilted toward USD settlement. The entire broken shale oil and gas sector is on the verge of collapse. This saga is given reprieve only by the USFT Wall Street collusion to lift the crude oil price via open market contract support. The crude oil price will work its level toward the equilibrium prescribed by supply and demand. The bank sector wished to avoid a $2 to $3 trillion disaster in the energy fields, where the guaranteed failure of their shale strategy is assured. Theirs is a wrecked Ponzi scheme with rising oil rigs required, but with contaminated groundwater systems. The gold trade note and petro-yuan will kill the king dollar. The introduction of the gold trade note is the dagger in the heart of the petrodollar de facto standard. The petro-yuan futures contract in Shanghai is the death warrant for the same petrodollar. Already the Saudis are accepting RMB as oil payment by China. Food prices and consumer prices across the entire table are rising in the U.S. economy. Most popular uprisings throughout history occur after the food prices rise beyond the reach of many lower-tier households. Gasoline prices might offer a small oasis of relief, but with a ravaged bank sector from the damage. The public has noticed the price increases. Meanwhile, soybeans rot in US-based silos, since no buyers amidst trade war. Miserable U.S. economy in reality is the harsh bite. The housing market is ready to enter a new decline, as the subprime factor has become entrenched all over again. The car and small truck market is already in a collapse mode. The public is fooled by the high stock market indexes, which seems to produce a mesmerizing effect. As the Western central banks continue to tighten on monetary policy, whether with higher interest rates or reduced credit flow, the result will be a suicidal sequence. The marginal nations will fail, but leave the Western banks with defaulted debt. They will turn east and seek entry into the Eurasian trade zone, which is expanding with the promise of economic growth and revived vitality. Meanwhile, all elements of the US-China trade war show the United States as the loser. The Chinese have found other sellers to their country, while the US has lost buyers. The rotting soybean story in the U.S. farmlands is horrendous. At the same time, tariff costs are passed down to the U.S. households and businesses. The Trump admin has achieved a lift in domestic prices along with a strong downshift in U.S. trade. The description of bumbling seems apt. Then again, all U.S. government foreign policy initiatives since 9/11 have been dismal failures, without a single exception. Final remark on clever Chinese tactics. China is evolving in its clever usage of funds, in a multitude of ways. They are ingenious in their methods and astute in acquiring solicited counsel. The Chinese have lent money to Angola for managing their government debt in Africa. The source of funds has been U.S. treasuries held in reserves in Beijing. The key twist is that Angola repays the Chinese after selling crude oil on the open market, but now in RMB terms. They no longer sell oil in USD terms. OPEC has become a defunct entity. As a result, China is weaning the entire African oil producers off the US dollar, using their debt vulnerability. Watch Nigeria follow suit, as they are a broken, corrupt, pathetic locale. China has financed projects, like in Sri Lanka. One stands out as a model. The deal involves development of a giant port facility, which will give access to China for the entire Indian Ocean region. Consider it a key element in the maritime pathways for the Eurasian trade zone. In a sense, China is outmaneuvering the US-UK maritime monopoly, which has endured for over 200 years. The source of funds again was US Treasury bonds held by Beijing. In this case, the Sri Lanka government is caught in a position where they are unable to repay the debt. Therefore, China changed the terms of the entire deal to make it a 99-year lease with full control. They created a Hong Kong on the Indian Ocean. Some financial analysts are calling this tactic used by China to be debt trap diplomacy. It is made possible by the need for economic development in the targeted country, and the available funds in the form of U.S. treasuries. This is but one example in an upcoming $1 trillion worth of Belt and Road projects to be launched by China, in 68 countries. The US-UK dynamic dead duo are stuck with debt and war, while the Chinese are engaged in investment and expansion. China is doing basic commercial colonization in several key African locations scattered across a dozen sites within the Dark Continent. They have built a worthy seaport facility in Djibouti, opposite Yemen. The ugly war has found a key protective site on the African side with Djibouti. In the last month, the Houthis of Yemen commandeered a Saudi oil tanker bound for the Suez Canal. The Saudis might be compelled to delay or suspend oil tanker shipments to Europe through the Suez Canal. The threat would not be possible without the Chinese presence in Djibouti. It is highly strategic. The United States is in the midst of losing the Gulf region to Iran and China. At the same time, the Saudi kingdom is crippled by the lower oil price, by high costs of the filthy Yemen war, and by wasted wealth. The Saudis are also facing much lower oil deposits held in reserve, near total depletion, a grand lie and very ugly secret. They will be urged to turn toward development of their truly considerable, if not magnificent, mineral reserves. China and Russia began this concept of grandiose effective economic development with the Holy Grail energy pipeline deal in 2014. The financing has come largely from U.S. treasuries, and the crude oil payments for the Russian production has been in Chinese RMB currency terms. It has been a direct assault on the petrodollar de facto standard. The biggest oil producer in Russia, and the bigger oil consumer in China do not use the US dollar in their oil trade. The US cannot sanction both superpowers, since that would be both stupid and futile. Oops. They did, a clear sign of fascist aggression and megalomania gone amok. The first section of the larger plan of Holy Grail pipelines has been completed in record time. The Russians are using the RMB oil payments to convert to gold bullion, done in Shanghai. The days of the king dollar in dominance are gone. The Chinese RMB will take all secondary stages, leaving the US dollar with the abandoned central stage. In the process, the RMB will continue to make significant strides in trade payment volume. Later the RMB will make parallel gains in bank reserves allocation for numerous foreign nations. The great threat: China has no intentions to continue with the US dollar as global reserve currency. They plan to use the RMB in a caretaker role, first to supplant the dominant USD in global trade. Then the natural follow-on effect will be to supplant the U.S. Treasuries in banking reserves. The ultimate plan and goal is to re-establish the gold standard in global financial structures. They wish to restore the equitable system, the sound system, the balanced system. The US dollar realm and rule has failed, made abundantly clear in 2007 and 2008 with the onset of the global financial crisis. Not a single problem from that crisis has not been fixed in any remote sense. All the harmful destructive measures used for creating the 2008 crisis have been used on a global scale in the last decade. It has been spread to the entire bond world. The standard U.S. Treasury has become a subprime bond. Entire bonds will be forced into debt restructure after default. It will surely occur in hidden form. Entire banking systems will be forced into debt restructure after failure. It will surely occur in full view. The Chinese will take the lead in implementing the gold standard. The gold price will naturally rise an order of magnitude. Silver will also rise, but with other factors pushing it to much higher levels, like next-generation energy systems. Hat-trick letter profits in the current crisis. As a Golden Jackass subscriber, I greatly enjoy listening to your interviews because it really lends a sense of passion that lies behind the tremendous body of information and formulation that goes into your monthly research. Though I must admit, it scares the hell out of me most of the time. Still, I will not miss it for the world. I feel that having a truly objective insight from your research, in-depth analysis, and accurate forecasts gives me and my family an important life-saving advantage. And I mean that sincerely. Michael's in Ontario, I have continued my loyal patronage of your excellent commentaries not so much because of my total agreement with your viewpoints, but because you have proven yourself to be correct so often over the years. When you are wrong, you have publicly admitted it. You are, I suppose by nature, an outspoken and irreverent spokesman for truth against power, which differentiates you from almost all other pundits on world affairs. Paul R. in Hawaii, for over 5 years I have been eagerly assimilating any and all free information, articles, interviews, etc., that Jim Willie puts out there. Just recently I finally took the plunge and became a paid subscriber. I regret not doing this much sooner, as my expectations were blown away with the vast amount of sourced information, analysis tied together, and logical forecasts contained in each report. Joseph M. in South Carolina, Jim Willie is a gift to our age who is the only clear voice sounding the alarm of the extreme financial crisis facing the Western nations. He has unique skills of unbiased analysis with synthesis of information from his valuable sources. Since 2007, he has made over 17 correct forecast calls, each at least a year ahead of time. If you read his work or listen to his interviews, you will see what has been happening, know what to expect, and know what to do. Charles in New Mexico, a paradigm change is occurring for sure. Your reports and analysis are historic documents, allowing future generations to have an accurate account of what and why things went wrong so badly. There is no other written account that strings things along on the timeline, as your writings do. I share them with a handful of incredibly influential people whose decisions are greatly impacted by having the information in the Jackass format. The system is coming apart on such a mega scale that it is difficult to wrap one's head around where all this will end. But then, the universe strives for equilibrium and all will eventually balance out.